Good morning, Steve Reed with the Morning Grain Comments. Well, these are one of those rare days in which we don't really have overnight price action to give us a direction of the market. Right now, we're talking about maybe steady to a little bit easier tone. On Friday, we closed March beans at 13.06. The spread between Jan and March is down to only a 7-cent carry. March meals are near 3.91. March oil near 49 cents a pound. March corn's at 4.73 and probably will remain in this 4.68, 4.80 trading range until we hear more about the South American crop conditions. March wheat at 6.16 and Kansas City is 6.23, so Kansas City is only 13 cents above Chicago. We did see one crop scout reduce his Brazil soybean crop 2 million tons to 153. USDA's at 161. He's got his corn crop in Brazil at 117 versus the USDA's 129. In Argentina, he's got the bean crop at 50 million metric tons versus the government's 48. And he's got the corn crop at 53 versus the USDA's 55. So basically, the USDA was talking about a soybean production up 24 million tons in the two countries versus last year, and 13 million tons up in corn. The new revised numbers by this private group would suggest that beans is still up 18 million tons from last year, but now corn is actually down 1 million tons. Later this month, we get some key reports, kind of annual production, stocks as of December 1, and new S&Ds. One group raised their soybean carry up to 262 from USDA's 245 due to a higher crop. They did the same thing in corn, 2290 versus 2130 due to a higher crop, and they next year's wheat crop 1921 and carry out at 744 versus 659 this year. So let's call it steady to a little bit easier. Rains are going to be falling across the dry areas of Brazil next weekend and all next week. U.S. Mostly dry, but the warmer conditions will give way to a little bit normal seasonal cooler temperatures, but outside markets will be watching the Fed and also be watching money flow.